China's economy displayed a robust performance in the first 3 quarters of 2023, with a year-on-year growth of 5.2%, surpassing market expectations. The optimistic economic trajectory was mainly due to 4 factors. Firstly, the negative impact of the net exports on growth was contained. The resurgence of demand from advanced economies in the later half of the year ensured that China's goods trade surplus remained sizable. Secondly, China's industry activities revived. The industry capacity utilization rate experienced a resurgence, climbing by about 0.4% to 74.8% in the 3rd quarter. Thirdly, manufacturing investment remained strong. For example, high-tech manufacturing investment increased by about 11.4% year-on-year in the first 3 quarters. Lastly, retail sales remained resilient, with the private consumption contributing 83.2% to growth in the first 3 quarters of the year. However, the property sector remains a key drag on growth. This is unlikely to change in 2024, given still weak demand for the housing. So with that in mind, how about the economic growth in 2024? Overall, we still remain upbeat on China's growth, as we believe 4 headwinds could potentially turn into tailwinds in 2024. Firstly, our expectations regarding the bottom of the destocking cycle have been a key factor in preventing us from downgrading China's 2023 growth forecast in the 3rd quarter. This assumption has worked well. The acceleration in China's finished goods inventory for the 2nd consecutive month to 3.1% in September is a clear sign of restocking. Overall, we expect China's restocking activities to continue in the coming quarters. Secondly, China surprised the market by increasing the 2023 fiscal deficit target in October to 3.8% from 3%. The decision to augment the budget deficit in the last quarter of the year, first time in modern history, sent a strong pro-growth signal. So we expect China's growth target for 2024 to hover around 5%, and China may also set its fiscal deficit higher again in 2024. Thirdly, the latest APEC meeting in the US showed a marginal improvement of the bilateral relationship between the US and China. The expanded delegation, including all heads of the key economic decision body, showing China's efforts to normalize the tie as compared to the Bali meeting in November 2022, which mainly focused on the foreign affairs. This reduced uncertainty, which is welcome. Lastly, the widening US-China yield differential has dampened sentiment in China's financial assets, as well as the direct investment flows in 2023. However, considering our house view that the Fed may potentially cut interest rates from the mid-2024, the yield differential between the US and China may narrow, potentially alleviating the pressure on Chinese financial assets. A shift in the sentiment could be supportive of China's growth. What are the key things to watch for in 2024? I think it's important to watch how China plans to manage its twin challenges, namely property markets and local government debt issues in 2024. While China has taken a more aggressive stance in management of local government debt risk, responses to the property market risk have been comparatively reactive. One key aspect to monitor is whether China will establish a stabilization fund dedicated to acquiring housing projects from the troubled developers. Another significant indicator will be whether China will set a higher central government budget deficit, which would enable the central government to assume a more active role in leveraging. In conclusion, with these encouraging transitions, as well as China's step up for the risk management, we expect China to grow by about 5% in 2024.